Right, thanks Jasmeet for taking us through that, and flashing on our screens is the IIP data. Let's see how the industrial production has really done for the month of March 2026 and has been announced at 4.1%. Now this has remember been dropped from the February's level of 5.2% growth. So 4.1% when it comes to the IIP data for the last particular month. And remember that in the earlier times, in the month of February, it had picked up beautifully at 5.2%, and in the month of Jan, it was 4.8%. So it is lower than last at least 5 months that we are seeing the industrial output data at 4.1% versus, remember, the estimate that was pegged by the street was at 2.7%. So the month of March IIP data and some of the industrial numbers also, and the internals really showing up. Let's welcome on the show an economist to put all this into perspective. Aditi Nayar, who is the Chief Economist and Head of Research and Outreach at ICRA, joins in. Aditi, always a pleasure to welcome you on NDTV Profit. What do you make of the 4.1% figure for IIP? It is a considerable drop compared to the last month, but we were anticipating some softness already because of the global turmoil.
Thank you, Nisha. Absolutely, this is actually a much better number than what we were expecting. Having seen the contraction in the core sector output, we thought that growth would be somewhere in the range of 1 to 2%. So 4.1% is much higher than that. And I think the mining sector within the IIP has done much better than what coal and crude oil had suggested out of the core sector data, and manufacturing has held up pretty well. Given the fact that we did have the supply chain and price-related issues emanating out of the West Asia crisis. And also, when we look at exports, last year in March, there was, the trend of front-loading exports to the US was very much on at this point in time. So the base, because of that, was also not very favorable this time. So I would say that this is actually a much better outcome than what we were expecting.
That's right, Aditi. Consumer durables rise is 5.3% versus 6.9% on a year-on-year basis. So a big dip has come in that particular front, while manufacturing has still shown a slight growth compared to the last month. And as you mentioned, mining has seen a considerable growth as well. Where are we lagging behind, and what are the soft spots?
See, within the IIP, it is electricity which has not shown much growth. We already knew that. We'd seen that from the daily electricity data as well as the core sector data. This was a month where temperatures were on the softer side, and typically that is something that tends to pull down the electricity growth very, very quickly. Other than that, when we looked at the core sector, half of them had contracted in March, half had shown a growth. But most of them had anyway shown a deceleration as compared to February. So to some extent, the impact of West Asia had already started creeping into the core sector data in March itself. And the IIP has held up very well in light of that. Consumption related trends were still doing okay in terms of some of the other high frequencies that we're looking at. So it'll be interesting to see now in April, when we're in the second month of the conflict. But it's dragging on, but maybe the kind of stress has been internalized to some extent. How are the supply chains now holding up in the month of April? So next month, of course, when we get the data, it will be on the new series, not on the current series. So in any case, it could show a very different outcome as compared to what we would forecast at this point in time for April.
That's right. So Aditi, electricity sector and even primary goods output is up 2.2% versus 3.9%. So that's where again softness has come in. Consumer has seen softness. Electricity has seen softness, while mining, manufacturing has done much better. But it's also the first month, Aditi. This particular month can be reflective of a lot more of the West Asia crisis really impacting those particular numbers. What are you penciling in for this particular month then?
So, the interesting thing, like I was just saying, when we get the data for April, it will be on the new base. So, we really, at this point in time, it's a toss-up of what the new base is going to tell us For the CPI, we were much more sort of able to tell what the CPI inflation would look like in the new base as compared to the old base. But for the GDP series, for instance, we ended up seeing that the GDP on the new series in nominal terms was actually lower for the last 3 years as compared to the old series. On the IIP side, I'll be quite, I think my first guess is that because the IIP will be now moving to a new base, probably we will end up being able to calculate, data for a current set of factories. So perhaps it will be a better growth than it would have been on the old series. Having said that, the impact of West Asia would still be there. So I suppose we should be prepared for a modest growth at best, balancing both of these things out.
All right. So yes, new base, new series makes it even more less comparable on an apple-to-apple basis, Aditi. Well pointed out. But as the numbers really show, of course, apart from mining, manufacturing, the consumption-led area, consumer durables, consumer non-durables, capital goods, all of them have seen a huge boost. And that has really pushed up the IIP data much better than what the street was really penciling in over there. Any final word on the outlook?
So along with the IIP data, around the same time we'll end up getting the Q4 GDP data. So we're broadly penciling in it in at around 7% and the full year GDP growth for FY2026 at around 7.5%. Of course, we'll be looking at these numbers, looking at our forecasts more granularly in the next few weeks as we get more information on earnings and margins. How the onset of the West Asia crisis affected the margin side of things as compared to the volumes, which today what we gotten to know was better at least than what we had penciled in.
All right, Aditi, thank you so much for all your views and putting into perspective the IIP data that's for the month of March really coming in at 4.1%, much better than what was really being estimated given the context of the Middle East crisis and its impact on the economy. All right, let's cut straight across to Maruti's